We're discussing the one commodity that continues heading south. Market sentiment is supported by lower crude prices. Brent crude falling below $70 a barrel. Prices have fallen for 5 straight months and are on their longest losing streak since the year 2008. That's when the financial crisis hit us. Well, is there a floor to crude prices? We're going to be joined by AMRITA Sen, Chief Oil Analyst at Energy Aspects, and Jonathan Barrett, Economist and CIO at AYERS Alliance. Amrita, Jonathan, thank you very much for speaking with us. Can you put a floor to where this price is headed, Amrita?
I think in the very short term, this is still a market in panic mode, so I'd expect prices to continue to head lower. But I think eventually, once this panic has gone, we'll probably stabilize around the new range, which is $65 to $80 per barrel for Brent. And then, of course, once you see the effect of lower prices on non-OPEC supply and on demand, which will take time, second half of next year, we are expecting prices to start to climb back up again towards kind of that $100 range, but that's going to take a while.
Jonathan, would you agree with that we're likely to see prices between 65 and 80 all the way up to the second half of next year at least?
I think it's a little bit early to actually say. It's reminiscent to me of the crisis we actually had in 1986, where the price of crude lost about 2/3 of its value before regaining and actually rebounding quite strongly. I actually think, given the level of stimulus that we're throwing at the global economy, i.e. Japan, China, Europe, and of course the US economy is bubbling, that this should actually be a short, sharp move, although quite aggressive, that it should be an area where people should take advantage of in terms of hedging further purchases. So if there is a dip, I'll use it to hedge future purchases that we may need over the next quarter.
So are you suggesting then that prices will move back up almost as rapidly as they've declined, and maybe in as quick as 3 months or 4 months from now?
Look, I think given how fast it's moved lower, given that the people have, or investors have discounted what's happening in the winter months, and given the fact that we've got so much stimulus now being thrown into the peripheral economies from the US, I feel that this will really kickstart a lot of economies. You've got a lot of money, and you've got very cheap inputs now starting to go into economies. So I think I agree, short, sharp, and furious to the downside, but I think we can still keep targets. Certainly on Brent, I feel above that $80–85 a barrel.
All right, it's come quite as a boon to India as well. Amrita, what's at this point in time? You mentioned panic in your first answer, and I can't quite get why we're continuing to see prices drop lower, because the expectation was that OPEC would not cut production. We've already known about the weak economic spots in the world. All the conspiracy theories have been discussed to death. Why are prices still falling?
I think that's the most brilliant bit about this, that, like you say, pretty much everybody did expect that it would be very, very difficult for OPEC to cut production. I mean, we've been saying this for months, that we weren't expecting much more than a rollover. I think the issue is that there was still some hope that OPEC would come out and signal something in terms of, even if it's 500,000 barrels per day of cut, it would signal something. I think just the fact that they rolled over a quarter, and it was very evident throughout the week that there was a huge amount of discrepancy between what the GCC members were trying to do versus the others. I think that's really shocked the market to a certain extent, that you've lost a very important feedback mechanism, because people look at OPEC to cut production or increase production to stabilize the market, and that's been lost. But again, in a market, we've seen this in 08–09 as well, and even on the upside, when you get headlines on Iraq, it tends to overshoot and undershoot, and this is exactly what's happening now. It is undershooting, and therefore you're going to get a few days when prices just keep selling before you probably get a dead cat bounce. You're going to get a small bounce, and then it starts stabilizing.
So, Amrita, is the panic that you spoke about largely a technical panic?
Yes, very much so. I don't think this is driven by fundamentals. And also, if you look at pure fundamentals in Q4, they are fine. OPEC production in any case seasonally falls. Demand's picked up. It's really H1, because even with the demand pick up, and we do expect demand to pick up, it's really the supply issue. Supply won't react that quickly. And you are looking at potentially up to 1.5 million barrels per day of oversupply in H1. And that's the problem. And because people are looking at that and panicking about that, looking at the stock levels already that have been built, that's why you're getting that kind of technical breakthroughs now, and prices just keep falling.
Jonathan, what could be a possible trigger to the upside? Could it be the American winter, if it gets even worse than expected? What could possibly trigger, if you say, a sharp reversal, if that should come about at all?
Well, I think it's also important to note that the last couple of trading sessions have been as a result of low liquidity, Thanksgiving, and not a complete market. And I think that's also added to the downward pressure for the commodity. So that's important not to forget. But any trigger to the upside, I generally feel it has to come from good economics and also some form of, perhaps a much cooler winter, or even more of a crisis developing or some geopolitical crisis starting to develop. There is nothing on the horizon at the moment that we can really pinpoint apart from good economics. But you know what the market's like; these things can just happen. So I think the overshoot there, it should start to stabilise. The question is, how far does it go down before it actually does that? And like we've seen before, there is possibility, given where the market is, for another couple of days of severe losses, which could see it, downwards of, anywhere from, 55, 50, and the potential for 40. So I think...
Jonathan, I'm going to stop you and ask you to repeat that again. 55, 60, and a potential for 40. You think that's within OPEC's tolerance level? I know they rolled over and they haven't fixed the next meeting date, but they could call an emergency meeting if we continue to see these declines.
Well, what you have to think of what's happening in OPEC now with the members. The members are now at a stage where Saudi Arabia is ruling the roost. You've got economies there which are under a lot of stress. Iran, Venezuela, Ecuador, all these economies that wanted to see production cuts. If they don't see it, their economies are going to suffer. They don't want to play the invisible hand theory of allocation. They want to cut. And if they don't, you might see discontent within the ranks. And as a result of that, you could see production pulled from these particular OPEC countries. And that could be a trigger for a low of some significance if the market continues to trade lower aggressively.
So what are the chances of us going, or crude oil prices, Brent dropping below 60? Let's put it that way. I'm not buying the 40. Brent dropping below 60, let's say, between now and the middle of next year.
Look, I mean, if anything, it's a sudden move. That's what we have to look at. This is a panicked market. And if you could think that when we had the crisis in 2008, the crisis in 1986, and you saw prices move as fast as they did and as far as they did before a bounce, then this is not beyond the realm of possibility if, in fact, we have a crisis developing. And that's something that we can only look at on a day-by-day basis till we get stability, liquidity back into the market. That'll allow prices to stabilise. And as everyone continues to say in a breath, we're oversupplied. If you're short the market and you add positions, and you're certainly not going to cover yet until you see sort of some substantial news that suggests otherwise.
All right, fair enough. AMRITA, where are you putting the floor, let's say, for at least the foreseeable 6 months?
I think, again, very short term.
Go ahead, AMRITA.
Yeah, no, very short term, we can definitely see prices, go towards 60, even dip below, because, again, it's just a reaction. But I would think we start around the 70 to 80 in the first half of the year. And then, or maybe 65 to 80, again, depending on how quickly we start getting that stability. I think that's going to be absolutely key. And then only in the second half of next year, potentially even Q4, that we will move higher. But yeah, I don't think we're going to go into the 50s and 40s and stabilize there. But I agree, we can definitely see moments where, we just sell off. And again, remember, Christmas liquidity will be drying up around that time as well. So especially the next few weeks is going to be absolutely critical.
All right, it's a day-to-day watch. We'll come back to both of you on another day when we continue to see prices fall even further lower. Thank you very much, AMRITA and Jonathan, for joining us on that crude debate.